But thanks to Forsyth County government for funding economic development and our reaches with Forward Forsyth. Andrew Shannon, you'll hear from him in just a second, but our platinum sponsor, Wells Fargo. First Citizens, and then our bronze, Smith & Howard Express Employment. Rodney, thank you. And North Georgia CFOs, and Tom, it's good to see you as well.
Thank you, Alex.
Thank you, everybody. If you guys need any help from any of these, Rodney will be more than happy. He can cure the workforce crisis right now in a quick hurry. He has everybody ready for you. And Tom Cook, it's getting ready for financial season, so he's ready to go on that in that aspect.
We stay
Andrew,
ready.
Thank you for being on. I think it's your first manufacturing call as well. But with that, I'm going to turn it over to Andrew Shannon, our platinum sponsor with Wells Fargo, to do our welcome for the Manufacturing Society.
Hello, can you hear me?
Okay, go ahead.
Okay, thank you. Good morning, everybody. Thank you for participating. Sorry we can't be in person. As you know, the COVID has picked up a little bit, so we thought it prudent if we did via Zoom, but it's good to see everybody. As you know, it's always great to be a part of this because the main objective is to get together to understand some trends in the marketplace and, more importantly, create relationships by way of partnerships that can induce your business, but also share ideas, thoughts, and things that you find working in your organization that might be able to share and address any questions or concerns that you might have. Alex has been kind enough over the years to continue to bring professionals and expertise to the meetings that share thoughts and ideas. With that being said, I also have a colleague, Corey Hooper's on the line with us. He's joining. I've spoke so highly of this organization. He just wanted to share. He works very closely with me here in bringing product services that create efficiencies to our clients' organizations. And once again, he thought he'd just listen in, so know that he's on the line with us. With that being said, I'll turn it back over to Alex. Honored to be here. And as always, if it's anything I can do, honored to do it.
Awesome. Thank you so much, Andrew. And everybody, we got Kelly Coates. Is it Coates or Cox? I never asked before the call.
It's Cox. It's easy to say, hard to spell.
Fair enough. But with Alpha Results, and she has become, and her team has become the expert in the employee retention credit. But we wanted to make sure that we could introduce all of the tax credits from 2021 into 2022 to make sure it's on top of your radar to take advantage of, especially with everyone growing and with workforce changes, everything that could be available to you, whether you can take advantage of it now or later. We just want to make sure it's top of mind and that everyone knows what is going on. And then Kelly also had mentioned for a CPA that's on the call that there may be a credit, and I'll let her go into more details about advantages for that. But with that, I'm going to turn it over to Kelly and let her get started. If you have any questions while she's giving the presentation, you can type them in the chat and we'll try and work them in to get them answered while it's fresh on your mind. But other than that, hopefully we learn a lot, and we'll have a bunch of questions at the end.
Thank you, Alex. It's great to be here. I already know some of you, and I recognize some of you. I had a career in commercial banking for 16 years at SunTrust. So Corey, I think we've either worked together or met along the way. So great to be here. I'm with Alpha Results. We are a tax credit consulting company helping Georgia businesses obtain tax credits to offset their Georgia income tax liability. And then this last year, we've been focused on the employee retention credit, which a lot of you either have already maybe researched or heard about, and we'll be able to get into the weeds on it. Like I said, I've been with Alpha Results now a little over a year, but I had a history at the bank at SunTrust in commercial banking and did a very small stint in staffing. I have Stephen McNeil from my team that's joining us. He is our COO and our tax expert for our company. He is also an expert on the ERC. So if you guys, as I'm presenting, if you guys think of any technical questions or questions that are pertinent to your business, he'll be able to quote IRS sections and codes and things that I'm not able to, and he can really be of help. So excited to be here. Thankful that Alex invited me, and we can go ahead and get started. I'm going to share my screen and get the presentation up. Let's see. Okay. All right. Can everybody see? Okay, perfect. All right. Okay. Right. So I've already done the introductions. So Georgia, as you guys know, they are a pro-business state. So they offer 3 state statutory credits that basically reward businesses for either hiring new employees, investing in new employees, or expanding their business. So the first credit I want to talk about is the Georgia Retraining Credit. It was designed to help offset cost of new and upgraded software and equipment that's used in daily operations. So if you think about, definitely for your, your industry, I mean, you guys are always thinking about, how can we improve our business and our technology? If you're not doing a technology change every year, you're probably going to be doing it in the next year or two. So this credit is available to any industry and to any businesses operating in the state of Georgia that pays Georgia income taxes. And that would include any pass-through entities as well. Here are some of the qualifying activities for the credit. If you're moving from, manual pen and paper process to a software type program, if you're, switching technology providers, if you're upgrading to a new version or buying new features of an existing software, or you're adding new users or seats to an existing software tool, those are some of the qualifying activities. And this just gives you a flavor for what the credit could be. You are able to earn up to $1,250 per employee per year on any type of software training activities. So if you had 100 employees, there's a $125,000 credit available just right off the bat. So hopefully this gives you a picture for what it could be depending on how many employees your business has. Here are some examples of the qualifying softwares for the credit. This kind of it runs the gamut. Any type of accounting, finance, billing software would count. Any type of time management, planning, scheduling. For our construction companies, that's any type of project management, job costing, estimating equipment, or software would count. CRMs, purchase order management systems, and then specific for your industry, production, warehouse, and inventory management. Some of the other softwares I wanted to mention are, if you think about if you have a new production equipment or tool that you purchase for your business, and there's typically going to be some type of software component to it, training for that piece of equipment will count. And so especially for our manufacturing clients, I mean, they have lots of opportunities, especially as you guys grow. New quality systems like Lean and Six Sigma would count. New ERP systems, SAP and for Oracle. And then if you're any type of document management system or office automation system would count as well. Okay, here are some basics of the benefits of the credit. I've already mentioned you can earn up to $1,250 per qualified employees for their training activities. The credit can be used to offset 50% of your income tax liability in a given year. You can carry forward the credit up to 10 years, and you can actually look back 1 year. So if you want to capture the credit, let's say in 2020, as long as it's been less than 12 months since you filed your 2020 Georgia income tax return, you're able to look back and do an amendment and capture the credit. Eligibility, your employees must be Georgia residents and they must have worked at least 16 weeks at the company full-time. And we define full-time as working an average of 25 hours a week to count. Allowable cost that we can include in the credit are development costs of the training or vendor costs. So let's say you're going to implement a new ERP system, you're working with a vendor, you've got a management team that's figuring out, okay, how are we going to roll out the training? All that time and cost we can include in the credit. Instruction costs, instructor salaries. So if you hire an instructor or an outside consultant to do the training, we can include their salaries in the credit calculation, employee salaries, and then any type of travel cost or material cost. So this is a really good credit to think about for, okay, we're implementing a new software. We've got a large portion of our employees that are going to be trained. We're spending a lot of money to hire outside consultants. We're purchasing a software off the shelf. I mean, those are the activities that you need to think about for this credit. And quite frankly, for manufacturers that are growing, there's probably going to be a retraining credit available. Kind of a good rule of thumb where it makes sense to look at it is if you have maybe 20 to 30 employees, or even 20 to 30 employees with a company, that's when we'll really dig in and do the analysis. Did anyone at this point have any questions on this particular credit?
Kelly, I just want to add,
Sure.
if you install new equipment and training on the new equipment, that's a qualifying activity. Likewise, if you have any kind of total quality management, the Six Sigma and the like, that's qualifying training. Essentially, if you have canned software, like Microsoft Office, that would not be qualifying training. But you'd be surprised that during the course of the year how much training you do have within your company, because if you don't have any training, you're really stagnant. And so one of the benefits of working with Alpha Results is the peeling the onion to discover and identify the qualified training. And also in terms of the credit itself, the majority of the credit is based off of the development costs that Kelly was talking about. Employee salaries actually make up a small component of that credit. And so, it may seem insignificant in terms of the training that you've had during the year, but when you start factoring in the development costs, the amount of the credit can actually grow pretty rapidly.
Hey, Stephen, we had a question from Joanne. She said, does safety equipment, safety training purchase, or coordinated in relation to a new system qualify? What would you say?
Yeah, typically safety and the like does not. If it is a component of a new system, there may be a position to qualify that training, because again, we're looking at, and I can't tell if that new system is equipment or software. I'm going to guess equipment. I haven't dealt with safety issues with software, so I'm going to guess it's equipment. So I would take a look. I would not peel that out of the training related to the equipment, but safety and safety training in and of itself is not a qualified activity.
And Kelly, I had a question for you just to make sure that we were all, is it 12 months retroactive from date of application? Is it fiscal year? Where's that 12 months start?
It's from the date that they filed their tax return. So, yeah.
So if the 2020 return was filed on September 1st, 2021, you'd have until September 1st, 2022 to file an amended return to capture it.
Perfect. Thank you for clarifying.
Yeah. Okay. And one of the, I'm going to share this example because it came up yesterday with a client. You know, once we're engaged with you, we can help you strategize on how to maximize this credit. I had a manufacturer up in Cartersville that purchased new equipment. They just had a handful of people that needed to be trained on it. But what we talked about going forward is if they were just to bring in all their employees, you know, 100 employees to train on that piece of equipment, maybe do a 30-minute session and have the rest of their workforce train on that equipment, even though in their normal job, they may not need to have access to it. We can use those training hours for their other employees to help up the credit. So, you know, we can get in there and be strategic on how to help you guys save more money. So I'm going to move on unless there's any other questions on talk about the two other main Georgia credits available. The second one is the Georgia Jobs Credit. It is based strictly on your address. Hold on a second. Okay. And it's based on where you're located. So, and it rewards companies for adding jobs based on your location. So the state of Georgia tiers all the counties based on wages paid and kind of the economics of the county. So in Forsyth County, it is a tier 4 county. So to qualify for this credit, you would have to add 25 full-time jobs in 1 year to earn. The credit would be $750 per employee. Now, the employees must have Georgia withholding, receive W-2s, and work an average of 35 hours a week. And the company must also offer group health insurance. The credit can be used to offset Georgia income tax or payroll withholding in certain situations. And then there's a 10-year carry forward. So one of the things to think about for you guys is if you're headquartered in Forsyth, but if you have multiple locations, your other locations could be located either in a different county or a different zone where they could qualify for this credit differently. For instance, I had a client that their headquarters is up in Atlanta, but they have an office down by the airport, which is Clayton County. In Clayton, all you have to do is add 2 full-time jobs a year, and you will earn a $7,000 credit for adding those 2 jobs because they are a tier 1 county. So I don't know if some of you have multiple locations or you have clients that have multiple locations, but you know, a quick address to myself or Stephen could quickly tell you what the opportunity is. Stephen, did you have anything to add? That was the only thing I had on the jobs credit.
Well, we are seeing that the Georgia Job Tax Credit really for 2021 is going to be a very valuable credit. Now, as Kelly mentioned, you know, in Forsyth County, you have to add 25 net new jobs, and so that's a tough threshold to reach. But you know, we've seen that before. But you know, as you mentioned, in other locations, the credit ranges from $1,250 to $3,500 per new job. And with the pandemic, and if in 2019 you actually had a relatively low head count, you may have laid off some people or furloughed some people, and then brought them back in 2020. As long as you didn't take the credit in the past, we can go and capture that growth that you experienced from 2019 to 2020 as a job tax credit. And we're seeing a lot of companies that did not qualify in the past are qualifying for 2021 because of the rehiring well, I can't say post-pandemic, but as we get to our new reality and the work situation. So I would take a look at if you've dismissed in the past as not qualifying, I'll give Kelly or myself the physical location of your plan and general head counts. And we can go and scope what the opportunity is. We're seeing a lot more people, a lot more companies qualify this year than they had in the past.
Those are good points.
I had one quick question on this, just to since Stephen had mentioned that workforces are changing, and manufacturing is a little bit different than other businesses, but with remote workers now coming into play, counting towards the head count, as long as they have a Georgia residence and receive W-2, they would still qualify even if they're not on site.
Yeah.
Perfect.
Yes,
that's true. And what it is, because of the remote situation for a lot of workers, you're tied to a specific location. So we wouldn't look at the personal residence of that employee, but rather where the company headquarters, where that individual would be tied to, which office or location they'd be tied to.
Any other questions? Okay. The next credit is the Georgia investment credit, and this one is specific to the manufacturers or manufacturing industry. If you're not familiar with it and you're a manufacturer, I would recommend you become familiar with it. So it's available for manufacturers who've operated a facility in Georgia and for at least 3 years. It is looking at what were your capital expenditures related to manufacturing. It could be equipment purchases, construction of a new facility, adding, improving property. All it looks at is what were your capital expenditures in the year related to your manufacturing facility. The credit is taken in the year following the year where a minimum investment is made, and you can amend up to 3 years. So the minimum investment to qualify for the credit is $100,000. So if you have $100,000 in capital expenditures, you would qualify for the credit. And where the Georgia retraining credit, you can only look back or do an amendment for 12 months or 1 year. Here, you can do an amendment for 3 years. So if you've had, if you're in year 2 or 3 of a project and you had costs a couple of years ago, then we can look back and do an amendment to capture the credit. Typically, our ideal opportunity for our firm are capital expenditures of at least $1 million a year. That's kind of where we start as far as being a good resource for clients. The payout is similar to the jobs tax credit. So it's strictly based on what county you're located in. So for Forsyth, for instance, their payout would be 1% of the capital expenditures for the year. But in some of the other counties, particularly in South Georgia, you could earn as high as 5% tax savings. So again, a really good credit, very specific for manufacturers. Again, the state's trying to promote activity and generating new business in certain counties. All right, we are about to move into the employee retention credit. So I just wanted to stop there, give kind of a highlight. I've presented to you 3 Georgia income tax credit opportunities for your businesses. You have the retraining credit, which is for software training, the jobs tax credit, which is for adding jobs in certain counties. And then you've got the investment credit for capital expenditures. So we're here to be a resource. We're here to answer questions. Again, these are really good opportunities, especially for growing manufacturers. I mean, you would probably at a minimum have an opportunity for at least one of these tax savings credits, or if not one, all of them. So.
Kelly, if I could just add, with the ITC, if you have a business expansion that qualifies for the investment tax credit, that also created jobs. You can take the investment tax credit or the job tax credit, but not both on the same expansion. And so that is something that we routinely do, is we'll evaluate which of the 2 credits is more lucrative for your company. And so, as Kelly mentioned, if you had job growth unrelated to the investment, you can take both, but you just can't take both credits on the same expansion.
Okay, we will move on. Hopefully this is interesting to you. I know it gets very detailed, but the end goal is to basically get more cash that you didn't know was available for your business so you can continue to grow your business and make more money. The employee retention credit, it is a credit that came out alongside the PPP loan back in March of 2020 as part of the CARES Act. Originally, they said if you took the PPP loan, you were not eligible for the employee retention credit. And at a high level, it's a payroll tax credit for wages you paid basically during a pandemic. In December of 2020, they put out new legislation that said, even if you took PPP, you are now eligible to apply and obtain the employee retention credit. So back a year ago, our firm, we really got in, dug our heels in, tried to learn as much as we can about the credit, and we rolled this out to our clients. We partnered with the attorney firm DLA Piper that helped write the credit. So we have access to the brains behind the credit and all the details. That's been super helpful. I would say to date, we've pushed out 200 deals, generating about 40 million plus for clients in credit. So this is a really good one. If you have not looked at it for your business, I would highly recommend it. Stephen and I can help you kind of do a quick qualifier to see if you're available or see if you qualify. So to get into what it is, hold on. It is a credit that allows employers to recover between 50 to 70% of wages paid, including healthcare or health plan expenses, up to a maximum of $5,000 per qualified wages in 2020 and $7,000 per employee per quarter for qualified wages in 2021. Eligible wages are capped at $10,000 per employee. It can be used to offset the employer's share of Social Security taxes on wages that were paid to an employee. Like I mentioned, those that did not qualify for the ERC in 2020 due to receiving the PPP loan are now eligible. And even if you took PPP round 2, you're still eligible. The credit must be captured on an amended return. Amended, and when I say return, it's a payroll tax return. It's the 941 return, and you can it can be refunded to the employer, or it can be credited to future periods. Most of our clients elected to receive a check from the Department of Treasury. We do have clients that have received their checks. This is a real credit, and they're getting big cash in their accounts. One thing I wanted to mention on this, a lot of times I get, when I talk to a prospect, it's, well, we didn't lay anybody off during this period, or, we had to reduce their pay. Like they're wanting to make sure that we know that kind of where they were with their employees. The credit does not look at who did you keep, who did you let go, who did you furlough. It only is going to analyze what wages did you actually pay from March of 2020 through September 30th of 2021. And then we'll help you figure out what quarters you qualify for, but it's only going to look at what wages did you pay. So I just wanted to mention that. So what are some of how do you qualify? Let's move on. For 2020, if you have less than 100 full-time employees, and full-time is defined as employees that work an average of 30 hours a week, this is how you qualify for 2020. It looks for a reduction in gross receipts in any quarter in 2020 compared to the same quarter in 2019 by 50%. So it's looking for a 50% drop. Very steep. We have a lot of clients that actually did pretty well during COVID, but this is kind of the first way to qualify. The other way to qualify would be if you had a suspended operations due to COVID, a COVID-related government order. So Stephen and I have a client in Woodstock. They are a manufacturer, but what they do is non-essential. So Governor Kemp had restrictions on their facilities for 3 weeks in April of 2020. So we were able to go in and capture a credit for them for that time period, even though their gross receipts didn't fall by 50%. They were subject to Governor Kemp's restrictions on their operations for that time period. Just to also give you a flavor for the credit amount, I have a manufacturer there in Alpharetta. They have 23 employees and they qualified for 2 quarters in 2021, and their credit was about $250,000. So the dollars are real, and I think this is why Alex wanted us to come and talk to you guys, just to make sure you're doing this analysis either with your clients or with your firm. So for 2021, the payout's richer, it's easier to qualify. So if a company has less than 500 full-time employees, the way you qualify is you must have gross receipts drop by 20% in any quarter in 2021 versus the same quarter in 2019, or you are subject to a government order suspending your operations. If you have more than 500 employees to qualify, you must have continued to pay employees for work not performed. And I forgot to mention for 2020, if you have more than 100 employees, the only way to qualify is for paying wages or paying employees for work not performed. So that at a high level is how you qualify.
And let me just add,
Yeah.
Kelly, that employment level is based off of your 2019 headcounts, and it's full-time employees, not full-time equivalents. So the average is 130 hours a month. And so you could have, 1,000 employees that only average 100 hours a month. They would not be considered full-time employees. So it's those individuals in 2019 that averaged over 130 hours per month would be included in that head count.
Okay, thank you. Okay. This is a very simple example just to put some math to the credit. In 2020, a company had 20 eligible employees. Their wages maxed out, or the wages per employee maxed out at $10,000 for the year. And so they were able to get a $100,000 credit. Wages paid in 2021 was, for wages paid in 2021, they earned $7,000 per employee. And so they were able to capture a $140,000 credit. And I wanted to mention the way you capture the credit is you do an actual amendment of the 941 that you've already processed. If you were to engage our firm, we actually can help prepare those 941 amendments for clients that they can just send in or provide to their payroll company. And once that is processed by the IRS, which is taking a couple months, they will get a physical check from the Department of Treasury. So, Stephen, did you want to say something?
Well, yeah, I'll just clarify. The limit is $5,000 credit per employee for all of 2020. So the wages cap out at $10,000 per employee. So the opportunity in 2020 is ultimately $5,000 credit per employee. But in 2021, and this goes for Q1, Q2, and Q3 because they took it away with the infrastructure bill in Q4, it's $7,000 credit per employee. And so, there's an opportunity to capture $21,000 of credit per employee in 2021, $10,000 per quarter wage cap. Most employees today are making over $40,000 a year. So it's a pretty easy threshold to hit. And as Kelly mentioned, the credits claimed on an amended return, we are starting to see there was a delay in the IRS processing the amended returns. They had a backlog. We are starting to see that logjam loosen up, and we're seeing the refund checks coming. So it's good progress that we're seeing in terms of the IRS processing these amended returns now.
That's a good point. The next slide is a sort of a flow chart. Some clients learn better this way. So it basically all the questions and the data that we put out to you, you could just kind of, flow through this to determine if you're eligible. So I sort of like this slide because, some people like graphics, but you can just walk through, start at the top. Did your business experience a significant decline in gross receipts? Yes, for wages in 2020. And then you just kind of go down. So one of the ways that we can, what are the benefits to partner with Alpha Results? We can decrease your workload. We can actually, work with you to help obtain the credit. Like Stephen said, for the ERC, we can prepare the 941s and get those in. For the Georgia Retraining Credit, there is an approval process by the state. And so working with us, once we get the information we need, which is typically just a payroll report, copies of any training materials, and invoices for any of the equipment, that's where we start. We're actually going to prepare a package in a form that we actually reach out to. There's one person in the state of Georgia that approves that credit. We're going to actually reach out for you and get the credit approved, and then put a package together and get that over to you and your CPA to put it on your tax return. For the jobs tax credit and the investment tax credit, there is not that formal approval process, but we work very similarly. We put a CPA package together and we get it to you and the CPA to get it on the tax return. So our job is to stay up to date on tax credits. That's really mainly Stephen's job. When I get really detailed questions from clients, I'm out calling Stephen, like, what's the answer? And he does his research. And then ultimately, we're just looking for ways to help you find extra cash. Years ago, Alpha Results helped my dad's company. He was in pest control. They were able to get a $200,000 credit one year for the retraining. And he said that was just money in the street. I didn't even know it was available. So our job is to help you with your business, but also if you're a service provider, honestly, to help you make you look good. So that is it for the presentation. I've done enough of these to know if I say, do you have any questions? Not everyone's going to raise their hand, but really kind of dig in to think through, do you have any questions? They can be as specific or high level as possible. And we're here to help. Alex, did you have anything?
Thank you so much. And sitting through a tax presentation is always the most fun and exciting thing that any of these people will do today. But it is really important because not all of this has been available before. And we just want to make sure that everyone knows about it so that you can take advantage of it. Especially, I know that a lot of our smaller to mid-range manufacturing companies did qualify for PPP. We did have some that did not. This is quite a tough tax credit to take advantage of. In reaching out to some CPAs, Alpha Results was the best when it came to the ERT. So I would encourage everybody to at least look into it to see if you think you may qualify, because like Kelly said, it's different than the regular standard Georgia tax credits. It goes against it's different money, different
Payroll tax. Yeah,
absolutely. And so if you might as well take advantage of everything that you possibly can. And so just wanted to make sure that everyone had this information. And if it doesn't work for you, it may work for somebody else that you do know that didn't get to participate in the program today. This has been recorded though, so I'll send it out to everyone that registered. So if you want to share it to somebody, if nothing else, having this information will at least make you look smarter and feel smarter when you're talking to other manufacturers or just other medium to large businesses around the county as well. So thank you, Kelly.
Okay.
And let's see. Anybody else have any other questions? If not, or if you want to reach out to me specifically after, I can get you some answers. Kelly's contact information is on the screen if you want to reach out directly to Kelly as well. Chances are your CPA knows alpha results. If you want to reach out to your CPA and see what their thoughts and opinions are. Every CPA that I've talked to about employee retention tax credits says we're going to bring in alpha as a partner on it. So please just take a look at your books and see what you can do.
And Alex, Stephen, did you have anything else to add? Stephen is our expert, so I don't know if I missed any details that he could provide.
Well, no, I've just encouraged people. There was a lot of misinformation out there regarding the employee retention credit, and that's something that we help sort out. And you know, if you were told in the past that you did not qualify for the credit, I would say get a different set of eyes looking at it. You know, a large number of our clients at one time or another were told by their CPAs that they did not qualify, and they did not pursue it. And you know, when we've gone in, we've taken a look at what the government suspensions, because you can have a partial suspension that would qualify you, and the gross receipts test, in particular with supply chain issues. We're seeing the 20% decline in gross receipts in 2021, actually hitting a lot of companies that have been faced with the supply chain issues. And so we're qualifying people in Q2, Q3 of 2021 that in earlier in the pandemic did not qualify. So it's something to keep open, and there's no fee to have us look and try to qualify you. I spend most of my days either within the regulations or evaluating gross receipts on a quarterly basis for clients. And so like I said, it doesn't hurt for us to take a look and see how we can qualify you, and hopefully find some credits for you.
Awesome.
And we do have one question. I just want to mention two things. How our firm works, we work completely on contingency, taking a fee off the credit that we calculate. So that's how we make our money. On the employee retention credit, it is not too late. You have up to 3 years to do a 941 amendment from the date that you submitted the original 941. So if you're I had so many calls in December, oh no, doesn't this credit expire? Don't I have to get this in? And that's again, false information. There's still plenty of time. Joanne had a question. Are there limitations to companies that are based internationally?
Well, so for the employee retention tax credit, those are going to be U.S. wages. So provided that they pay U.S. wages, withholding, or paying into Social Security and Medicare, there are no limitations. You can have an international company that has a U.S. presence, as long as it's U.S. wages subject to Social Security. Those wages would qualify. Likewise for the Georgia-based credits, it's essentially you have to have Georgia-based activities. So if you have a Georgia presence, filing Georgia income tax returns, have Georgia employees, it doesn't matter where the company is headquartered out of.
Mm-hmm. The only other thing I'll mention on this, Joanne, if you have if you have a company that has multiple U.S. owned subsidiaries, we have to look at those collectively when we're analyzing the full-time employees. So, we've had companies that, German companies that own multiple locations in the U.S., they're different operations. We have to look at, okay, what are the employees for all their U.S. operations, locations, companies, to determine if they're under or over that 100 or 500. So.
And Kelly, I have one more question. I just wanted to clarify, since Stephen The 2021 quarter 1, 2, and 3, is that also going against 2019 or is it 2020?
2019.
Yeah, 2019. You're looking at comparing gross receipts in each of those quarters. Now, what's really neat about the 2021 opportunity is if you qualify, say for example, in Q1, you have a greater than 20% decline in Q1 2021 versus 2019, you'll automatically qualify then for Q2. There's an alternative measurement period which allows you to look to the prior quarter. And so if you qualify for Q1, you automatically qualify for Q2, likewise, Q2 to Q3. So if you qualify for one quarter, you're going to qualify for 2 quarters in 2021.
And if you qualify, well, Stephen, do you want to explain like the looking back at Q4 2020?
Yeah, so you have the opportunity in Q1 to look back to Q4 of 2020 versus Q4 of 2019. And so where 2020 you had to have that 50% decline to qualify, the alternative measurement period for 2021 Q1 is Q4 of 2020 versus Q4 of 2019. And it's a 20% decline, not the 50% decline typically with 2020.
All
right. I mentioned this to Alex, we're right at 50 minutes. For those that are CPAs and want to count this as 1 hour of CPE, you certainly can. I can provide the presentation to you to document on your end. So happy to provide that for you. So just want to mention that.
Thank you. Did anyone else have any questions for Kelly or Stephen? If not, I was going to ask the group a question and move forward. But I'll pause just in case another question pops up for you guys.
No.
All right. Thank you everyone for participating. As you know, we put these events together for this group so that we can share ideas and see if anyone's found the secret sauce to help their business grow. I assume continuing the way that everything's been going, that workforce is still the biggest challenge for everybody at the moment. And I see that Stephanie Ponce with the Department of Labor is on the call, and I don't want to put her on the spot and say that she's going to fix everything immediately. But if anyone has done anything that they've seen to help gather more employees, or if there's anything that you would like for us to do to try and help put some career fairs together in the county. We launched the FOCA Works Initiative last year, which is our community workforce development initiative. And part of that, we are doing some strategic marketing for career fair opportunities. So if any of you would like to participate in a manufacturing career fair, what we're asking right now is we've got billboards around Forsyth County that we can advertise to, but when we're mapping out where our employees are coming from, most of the time they're not coming from Forsyth County specifically. So if you guys could help us out just on a data gathering piece, we don't need any specific confidential data, but if you could just send us a list of zip codes on where your current and past employees are coming from, so that way we can target our efforts to strategically market our career fairs in those areas. It is something that we do want to help take advantage of. So it doesn't have to be today or this week, but in the near future, if you could send us this data, we would definitely appreciate it. It may not help you, but it could help your neighbor. So that is something we're looking for. And Stephanie's we're already at the lowest unemployment rate that I don't know if we've ever had, but it's been at least 20 years since we're at 1.5%. So it's tough on everybody. So anything that we could do a little outside the box, we're definitely going to help pursue that for you. And Stephanie unmuted, so she's brave.
Yes, I mean, I can answer, I can try to answer any questions, but it is like pulling a rabbit out of a hat to get workforce. We're seeing quite a few things that are influencing that. Virtual schools back in session, so that's affecting moms. We're having issues where the child tax credit from the federal government is still influencing people not wanting to go back to work. If you've got X amount of kids, you're still getting a lot of federal money that's really not encouraging people to go back to work. A lot of people that are baby boomers are currently retiring because of COVID. They're like, you know, we're just done. And unfortunately, a lot of the manufacturing in preparation. And so those open positions, they're having some difficulties in filling those positions. So it would be wise to really look at your workforce that you have inside and really try to promote within and give them opportunities to cross-train. The other thing that's really affecting and the COVID influence is that many of the people have left the workforce, but they're starting their own little boutique businesses. And so, you know, so that's kind of an interesting aspect too.
Well, and unfortunately, that is the trend that we are seeing. But as Kelly had mentioned, and as many of you are starting to lean to, there are tax credits available for investment into the company. So if we do need to get some automation and machinery and stuff to not replace jobs, because that's kind of a terrible, but to keep the company going and to I guess use the COVID term of pivot your company, there are tax credits available from the state level. And then depending on the level of investment, if you come and talk to us on the economic development from the local and the community level, there are some tools that we can help throw at that as well. So if you guys are looking towards that and you want some assistance or just to have a conversation to see what could be available to you, please come and talk to me, and we'll be happy to help you out in any way we can, because you're the bread and butter, and you're why we have the cheapest millage rate in Metro Atlanta. So we got to keep the #1 school system, and having that strong manufacturing base helps us keep that. So anything that we do to help you stay or to help you grow continuously, we're here to do. So.
And Alex, you made a good point about automation, because of, you know, from what I'm seeing and reading, and it would behoove manufacturers to really look at their operation and implement automation, because the workforce is probably going to be affected, you know, for a few years to come. And if there's an opportunity to do some automation, but then too, you've got a whole new skill set that goes along with that for training, and it's a little bit more with the robotics and things like that. So keep that in mind as well.
And unless the world changes again, and hopefully it does not, for the next manufacturing event, I do have it planned where 2.5 years ago, believe it or not, it's been that long, we brought in the research R&D specialist from Georgia Tech in the additive manufacturing and 3D printing lab to talk about advancements in robotics and in 3D printing. And so we were going to bring him back because in 2.5 years, a lot has changed in that as well. So if anyone would like to host that event, we better be in person. We got it planned for May, so I'm not going to jinx this, but if anyone would like to host that, we're going to get Georgia Tech back up here to give us the insights on the advancements of 3D printing, and it'll also help in the supply chain issues that many of us are facing, because there's all sorts of different materials that you can 3D print in now. So it's quite revolutionary and really exciting. So we'll have that update coming for you guys in May. Any other questions for us? And if so, if not, thank you again to our sponsors. Oh, and Tom's got one.
All right, just a quick one, Kelly and Stephen, thank you very much. This is very informative, and I can see where companies can take good advantage of these programs. So, but thanks, appreciate it.
Absolutely. And thank you, Tom. You'll throw me right into our sponsors. So North Georgia CFOs, we couldn't do it without our sponsors. So thank you so much, Tom, and Andrew Shannon and Corey with Wells Fargo, and First Citizen, Smith and Howard, and I think Rodney had to jump off, but many of you are using Express Employment on Workforce. And if you are not using Rodney or you would like his contact, let me know as well. Thank you, everybody. We will see you at least in May, but I would like to get in front of everyone well before then. So it is great to see you. And if you need any assistance on expansion opportunities or growth potential, please reach out. And everyone will have this video sent to them as soon as I can get it edited to make sure Andrew didn't say anything, you know, outrageous to start us off. I don't know. I got to go back and re-listen to it. So, but Andrew, anything else you wanna say?
No, sir. I appreciate it. Great information shared, and look forward to some of the information you're going to share. I think that'll behoove all of us. That's great info.
Perfect. Well, thank you, everybody. Thank you, Kelly. Thank you, Stephen. And Tom, tell Melanie, thank you for introducing us to Kelly. So,
Sure, you bet. I will. All right, thank you.
Have a
Thanks,
Everybody
everybody.
have a good day, good week.
Bye-bye.
Bye.